Hello everyone, welcome to the channel that loves to help you through rough times, because life is rough without cash. The mission of this channel is to help viewers with acquiring and managing assets. In this video, we will take a look at what an emergency fund is, how to get started, and more.
Please note, the information in this video is for entertainment purposes only and should not replace professional investment advice.
So what is an emergency fund? Let's talk about it. An emergency fund is a sum of money set aside specifically to cover unexpected expenses or financial shocks that can arise at any time. This fund acts as a safety net to help you weather financial storms and avoid going into debt when unexpected events occur, such as car repairs or medical emergencies, losing your job or experiencing a reduction in income, home or appliance breakdowns, natural disasters, or other crises. You might be asking yourself, how much do I need? This is different for everyone. The general rule of thumb is to have 3 to 6 months worth of living expenses saved up in an easily accessible savings account. Nothing that is locked in for any period of time. This fund should be separate from your regular savings and investments. This is so you don't risk depleting them in case of an emergency. So why should I have an emergency fund? I'm glad you asked. Having an emergency fund in place can help you avoid going into debt when unexpected expenses arise. Reduce financial stress and anxiety. Focus on long-term financial goals like saving for retirement or a down payment on a house. It can also help you weather financial shocks without compromising your financial stability. It's also essential to consider your unique financial situation and goals when determining the right size for your emergency fund. I personally like to have a big buffer so I can stay calm during emergencies. So, how do I get started? I'm glad you asked. Building an emergency fund from scratch requires discipline and a solid plan. This video will outline some of the steps you can take. Here are 9 points that will get you started with your plan. 1. Calculate your expenses. 2. Identify your emergency fund goal. 3. Create a budget. 4. Prioritize needs over wants. 5. Start small and be consistent. 6. Choose the right account. 7. Automate your savings. 8. Avoid dipping into your emergency fund. 9. Review and adjust regularly. Calculate your expenses. First, start by tracking your monthly income and expenses to determine how much you spend in a typical month. Make sure to include essential expenses like rent, mortgage, utilities, food, transportation, insurance, and minimum debt payments. Don't forget to add discretionary, such as gifts and entertainment. 2. Identify your emergency fund goal. Determine how much you need for an emergency fund based on your income, expenses, and financial goals. Aim to save 3 to 6 months worth of living expenses. For example, if your monthly essential expenses are $4,000, aim to save $12,000, which is 3 months, or $24,000, which is 6 months. You get the idea. 3. Create a budget. Once you know how much you need for an emergency fund, it's time to create a budget that allocates funds towards this goal. Mind you, this can be flexible. Your budget mix will differ depending on your needs. If you aren't sure where to start, consider the 50-30-20 rule. What does this mean? So 50% of your income goes towards essential expenses, 30% towards discretionary spending, such as entertainment, hobbies, etc. Finally, 20% towards saving and debt repayment. Number 4, prioritize needs over wants. Be honest with yourself about what you need versus what you want. We all want that Lambo, but the bus may do just fine. Prioritize essential expenses and savings goals over discretionary spending. If you have an emergency fund, click the like button. Number 5, start small and be consistent. You don't need to save the entire amount at once. Start with a manageable goal, like saving $500 or $1,000 in the first month. Increase your target as your emergency fund grows, and stay consistent. Number 6, choose the right account. This is important. Open a dedicated savings account for your emergency fund, such as a high-yield savings account or a money market fund. This will help you keep your funds separate from your everyday spending money. 7, automate your savings. Set up automatic transfers from your checking account to your emergency fund account, such as bi-weekly or monthly. This way, you'll ensure that you're consistently saving without having to think about it. 8, avoid dipping into your emergency fund. Treat your emergency fund as a separate account that's off limits except in genuine emergency situations, such as unexpected medical bills, car repairs, or losing your job. Avoid using it for discretionary spending or impulse purchases. So, do you have an emergency fund? If so, how much do you have saved? 1 month? 3? More? Tell us in the comments below. Actual amount isn't necessary. A monthly value will suffice. Personally, I have a year's worth. Also, let us know if you have ever had an emergency where you had to use your funds. I have, and it was a new transmission. Not fun at all, but the funds helped me with that stress. Number 9, review and adjust regularly. To get started, set a realistic goal for your emergency fund. Regularly review your budget and emergency fund progress to identify areas where you can improve. Adjust your strategy as needed to stay on track. Based on your income and expenses, how much do you think you can realistically save each month? Remember, building an emergency fund takes time and discipline. But with a solid plan and consistent effort, you'll be prepared to face unexpected expenses and financial shocks in the future. A common question I get is, should I pay debt before I start an emergency fund? Well, it depends. Personally, I always recommend prioritizing high interest debt repayment over building an emergency fund. Here's why. First, high interest debt. If you have high interest debt, such as credit card balances with rates over 15%, it makes sense to focus on paying those off first. This is because the interest charges can add up quickly and make your debt more challenging to manage. 2. The debt snowball method. Consider using the debt snowball method, where you pay off the smallest balance first while making minimum payments on other debts. This approach provides a psychological boost as you quickly eliminate smaller debts. 3. Emergency fund is not a substitute for debt repayment. While an emergency fund can provide financial security, it's not a replacement for paying off high interest debt. Focus on reducing your debt burden to avoid further financial strain. However, there are some exceptions where building an emergency fund before paying off debt might be more important. Here are some exceptions. Urgent debt situations. For example, if you have a pressing debt situation, such as a collections agency or impending foreclosure, it may make sense to prioritize debt repayment. 2. Low interest debt. If your debt has relatively low interest rates, for example, 6 or lower, building an emergency fund might be more important. So, how do I decide? To determine the best approach, consider the following. Debt to income ratio. Calculate your debt to income ratio by dividing your total monthly debt payments by your gross income. A high debt to income ratio may indicate that you should prioritize debt repayment. Interest rate and fees. Assess the interest rates and fees associated with debts. If you have a balance on a credit card with a high rate, it's likely more important to pay that off quickly. If you made it this far, subscribe for more content. Videos going into further detail on how to budget are in the works, so stay tuned. Keep in mind, the emergency fund is there to provide a financial safety net. Its main purpose is to help pay for unexpected shock events, such as medical bills, car repairs, or unemployment. Aim for 3 to 6 months of essential expenses saved. The emergency fund does not replace debt repayment. Overall, start small, stay consistent, and check your progress often. For more information, check out one of my other videos using the link on screen. And join us every Saturday and Sunday at 12 noon Eastern for new content. Thank you for hanging out. Until next time.